Meanwhile, as Wall Street continues its retail investor death watch, we're learning more and more that it's actually hedge funds that are in a whole lot of trouble. In fact, according to one analysis, 2022 has been the worst year ever for hedge funds. Now they've turned to massive shorting to try to make up those losses. Meanwhile, as the retail investors, they've got very little cash in their Charles Schwab accounts, and their exposure remains pretty elevated with respect to where consumer sentiment is. In other words, they're still hanging in there. We've got a lot to chew on. Well, it's been a tough year for investors of all stripes, right? And now all eyes are on younger investors or folks who just entered this market since 2020. Now, Wall Street is saying that this batch of investors must blink, that they've got to take even heavier losses. Well, they actually have to realize their losses, bite the bullet. I think, though, Wall Street is underestimating the resolve of retail investors. Joining me now is eToro USA investment analyst Kaylee Cox. And you know, Kaylee, it's, for instance, this AAII allocation survey comes out every week. It's interesting because it remains very elevated. It's down just a little bit, and you put that on the same chart as consumer sentiment, and you say something's got to give because they used to trade in tandem. And I know eToro does its own surveys. I know you had one in March. So why are retail investors staying in there? Why are they hanging in there, even though Wall Street keeps saying that they've got to, bite the bullet?
Well, first, I agree with you, Charles. I think we're underestimating retail investors here. And I do want to note that the AAII survey data was pretty bearish up until a few weeks ago. So investors haven't exactly been naive about this drop. But look, retail investors have a longer time frame naturally, and we are seeing a younger investment base out there. Naturally, younger investors have higher risk appetites, and they've been shown to flood into stocks and crypto. So I wouldn't rule them out just yet. Millennials are coming into their economic power, and these younger investors, while they might not have as much cash on hand, they might have more resolve than you think.
Yeah, and here's the thing. I mean, historically, we're told to buy low, buy low, hold, and sell high. People have listened to that their whole lives, and they're saying, why should I sell here at the low, particularly to your point, if they're younger investors? So, I mean, isn't history on their side?
Yeah, and I'll add too, look, they're more educated than ever too. They lived through the great financial crisis and the bull market after that. And history is on their side. I mean, we know that now more than ever. Stocks have recovered from every crisis that they've been through. And there are constantly communities we're seeing, chanting buy the dip, chanting HODL, and not for bad cause, right? I mean, that seems to work out if you have time on your side. And that's the big if, but luckily retail investors, most of them do have time on their side.
What's your thought now on recession? Are we in a recession? Do you see that impacting this market?
Yeah, so there are warning signs. I'm certainly not going to step out here and say growth looks decent here. Growth is slowing, but I want to warn everybody, slowing growth doesn't exactly equal a recession. And we have reasons to feel optimistic too. Company earnings are coming in fine. Companies are reinvesting in their businesses. I think it really depends on the Fed now. We're watching the Fed closely, especially as the narrative flips into a recessionary narrative, to see if they change their messaging, because if that's the case, we could see markets back off from these rate hike expectations a bit.
What would do that? What would do that? Like a benign CPI print or something like that? A relatively benign.
Yeah, that's a really good question.
Yeah.
I mean, it's all relative, right?
Yeah.
But that's a really good question. I think that the signs are already there, and I think that even if the Fed hints a little bit at the fact that inflation may have peaked, just some progress there may be enough signs for the market to take back on these tightening financial conditions.
Let me ask you about the economic. Fed just released their economic well-being U.S. household surveys for the fourth quarter. 12% of adults held crypto or used it. 99%. Holding it as an investment, actually have a bank account. So this suggests to me that people are really looking at this as a legitimate, authentic, long-term investment. What percentage of them do you see now buying the dip?
Yeah, that's another really good question. And obviously we work for a brokerage, or I work for a brokerage that offers crypto. So we have a bit of a biased view. But in the survey that we ran in March, about 90% of investors ages 18 to 34 were planning on investing more money into crypto over the next 12 months.
Wow.
So we think here, especially with Bitcoin at these levels, with Ethereum at these levels, we could be seeing a lot of investors buy the dip. I mean, certainly institutional investors are going out and doing that. We're just telling customers to really remember the utility in crypto. I don't want to say flight to quality here. I feel like that feels a little wrong for the crypto space, but you know, there are cryptos with utility and with some asset ties to them. So you still have to be very distinguished when you're kind of looking through which cryptos to invest in.
Yeah, there's 12,000 of them, but we get what you're saying. You know, go with the, you know, Ethereum, go with Bitcoin. I'm putting words in your mouth only because we got a wrap here. But more importantly, 90% looking to buy the dip. That's what I call diamond hands. Kylie, thank you very much. Appreciate it.